I think that you've got an irresistible force meeting an immovable object, where both the Premier of China and the President of the United States want to come across that they prevailed and didn't give in, which means to me that I think we're going to keep seeing more tension, and I think that the 25% tariff bump is better than 50% chance.
You do?
Yeah.
What are the markets going to do if we get to Friday and we do increase the tariffs?
Well, it's already happening, I think. The market obviously doesn't want increased tariffs, so it's been kind of reacting to that. But we have to remember that the market hasn't gone anywhere in 15 months. I mean, people keep acting like this is some sort of a locomotive that's chugging along. But the New York Stock Exchange Composite Index, which to me is the most important one because it's the biggest, it peaked in January of 2018, and then it couldn't quite make it back to that peak in October, and now it couldn't quite get back to the October level, and now it's rolling over again. So, you think about where we are now versus October, and just about everything is about where it was or lower. So I think this has been a process of trying to digest Fed policy pivots, which have created a lot of volatility, and then the fact that the global economy has slowed down in a very major way since the really peak period of late 17, early 18. So I think that's what's going on. One of the things that I'm looking at, and I put this up on the screen at the Ira Sohn fundraiser yesterday, was the one most concerning indicator is there's something called data change indicator by Citibank. And what they do is they just take the whole basket of economic data and they compare what's coming out now to their 12-month moving averages. And that had been at a very, very good level, both for the United States and globally, into the first part of 2018. And for both the global index and the U.S. index, they've absolutely cratered nonstop. And the reason I bring that indicator up, because first of all, it's sending a signal, but beyond that, it's incredibly highly correlated with U.S. GDP, the U.S. data change index. In fact, it leads it, actually. And the divergence between GDP year over year and the indicator year over year, we haven't seen a divergence like this since 05 or 06. So a few months ago, I was saying that there are absolutely no indicators of recession on the horizon. And now we have some that don't suggest imminent problems, but they do suggest that it's not a lock at all, like it used to look like, that we're going to get to the presidential election without economic weakness and concern. And I think that that's pretty important, and I think that's why the market is struggling.
Okay. Let me play devil's advocate with you, okay? We had this big comeback in the market from December. Earnings are better than expected. China is better than expected. They've been stimulating the heck out of things there, and it appears to be working, at least on the surface.
Yes.
Europe isn't as bad as it was. I understand the German numbers were still weak. You're here were not of a recession variety. Granted, they were weaker, and they jumped over a very low bar. Mm-hmm. You've got growth here. You have no inflation. I hear the word Goldilocks being tossed around,
with all
Jeffrey.
that, the market hasn't gone up in 15 months. So that's, I think whenever you can tick off things that are backward looking and you tick them off as being favorable, that's priced in. Things that are known are priced in.
Better earnings aren't priced in.
Well, that's why we're back towards where we were in October, I think, is that rebound has to do with earnings being a little bit better, the economy improving in recent weeks until, I think, most recently. And obviously the Powell pivot was a really big deal for the market. And I think that it was the Powell disaster in December that caused the trapdoor market into December 26th. And the pivot was just so violent that basically got largely reversed. So I think that's what's going on.
So why should